our organization, in our company, if we have different organizations, so there might be condition arises where we need to transfer some goods or services, or some intangible assets or loan, something else, from one division to another division. Okay, now in this case, we have already discussed that if the organization is a decentralized organization, we appoint different manager for each division, and every manager wants to maximize the profit of their own division, because on the basis of the performance of their division, they get, they get commissions, bonus, and all, and their performance measurement is done by their performance of their own division. So every manager wants to improve the performance of their own division. But yes, now the topic is goal congruence. Goal congruence means, along with improving the performance of your own division, like you have your own division, along with the performance improvement of your own division, every manager should try to focus themselves on improving the performance of overall company, overall organization. See, so it means that if we have 2-3 different division, every manager is trying to improve the profitability of their own division. Okay, and but along with improving the performance of their own division, every manager should try to improve the overall profitability of entire organization. So this is all about, we have to study here. This is goal congruence. Okay, so we will decide this transfer price of the goods or services or any other things which we are transferring from one division to another division. The transfer price should be such that it should not just improve the profitability of the manager, of each individual managers of the division, but also the profitability of entire organization. Okay, the transfer pricing should be in such a manner. So keep it in mind, transfer pricing for goal congruence, we will decide such transfer pricing for each division, such that it should not just improving the performance of each division, because every manager wants to improve their performance of their own division, but not just focusing on improving the performance of the division, but also improving the performance, improving the profitability of entire organization, entire company, entire organization. They want to focus themselves like that. Okay, so this is all about goal congruence. So we have questions related to goal congruence, but I think these topics are left. We have to cover these topics first, then we will do a numerical related to goal congruence. So the topic in previous session, we have discussed the topic in which we have decided when we are transferring the goods from one division, division A, to division B, we are transferring any goods or services from one division to another division, we have discussed that we can decide the transfer pricing considering the market value or sharing the profitability of entire organization. We have discussed the question related to this. Okay, deciding such transfer price which is based on the market price or the transfer price which we will find after considering the overall profit of the entire organization and sharing that profit. Okay, now they are saying that we have another method of finding the transfer pricing, which is a cost based transfer pricing. See, in this method we have 3 methods. Means you can decide this transfer price based on marginal cost, considering the marginal cost, the variable cost, or you can consider the standard cost, you can consider the full cost. Full cost means considering the marginal cost and the fixed cost and all any other costs you have in the organization, considering all the cost of the organization. And here the transfer price is all the full cost of the business organization, or the cost plus markup. This is somehow similar to market price. Okay, means you're considering all the cost, marginal cost, fixed cost, all any other cost, you're considering all cost, and then you are doing some markup. Okay, so these are the method of considering, of finding the transfer pricing. And the last is negotiation based transfer pricing. Now see, why are we considering here transfer pricing as cost ठीक है. Why is there need to consider transfer pricing at cost? When we will do this, we can do this when we when it is not easy to find the market price of the goods or services which you are transferring from one division to another division. For example, I'm transferring a good from my division A to division B, and I know that, for example, I'm transferring a product P from division A to division B, and I know that for this product there is no external market. No external market exists for this product. No external market. In such case, I can't take market price, ठीक है, as a transfer price, because no market exists for this product. Okay, so in this case, I will consider the full cost or standard cost or cost plus markup likewise. Okay, so in this way we will find the transfer pricing. ठीक है, we will do the question related to all these things. ठीक है, now we have to find the transfer price. Now let us do this question related to transfer price. But before doing this question, I want to discuss one more point. I think we have already discussed this point, but just revise it. Let us just revise this topic. That before deciding the transfer pricing, see, I have division A and division B. Before deciding the transfer price of the goods and services which I want to transfer, ठीक है, I will consider many things. This is what we have already discussed. First, I will consider their own capacity. Capacity means what? Capacity means the maximum unit they can produce with the resources they have, the machine they have, the labor they have, the maximum unit they can produce. Okay? The maximum unit which you can produce in division A is the capacity of division A. Similarly, the maximum unit which you can produce in division B is the capacity of division B. Okay. Now, in case if you have spare capacity, I'll say unused capacity in your organization, then what will be the transfer price? If you have unused capacity, okay, in such case, what will be the minimum transfer price and what will be the maximum transfer price? Okay, see, this division B always wants to keep the transfer price as minimum transfer price, and division A always wants to keep the transfer price as maximum transfer price. So we will try to find out a range between the minimum and maximum transfer price. Okay, remember, this is what we have already discussed. The manager of division B always want to keep the transfer price as the minimum transfer price. Why he want to keep the transfer price as minimum transfer price? Because the goods he is receiving from division A, the price he will pay for the goods he is receiving from A is its cost, and we always try to keep our cost minimum. Okay? So the goods which he is receiving from division A, he want to keep the price of that goods as minimum, okay, so that he can reduce the cost of their business organization and he can increase the profitability of the business organization. So this is what he always want to do. Okay, this is what he always want to do. But for the manager of division A, the transfer price is the source of revenue for them. Okay? And we always wants to keep our revenue high. So that is why the manager of division A always wants to keep the transfer price as maximum transfer price. Okay. So they will negotiate between, there will be negotiation between them, and accordingly we will try to find out the transfer price for them. Okay, we will give a range to them for finding the transfer price. Now let's see one more thing. We have discussed about the capacity. Okay, we always wants to use our machines, our all resources in best possible manner. This is what we have already discussed up to now, whatever we have studied. Okay, up to chapter 8, whatever we have studied, we have discussed this many times that we should always try to use our resources, labor, machine, all resources in best possible manner. Okay, so we don't want to keep our capacity spare. Okay, means unutilized machine are unutilized resources. We don't want to keep them unutilized resources. Now see, in case, for example, my capacity or in division A is to produce 1 lakh units. If I have a capacity to produce 1 lakh units, but the external market for my product division A, the external market, I can sell maximum unit in external market. I can sell maximum unit in external market is only 60,000 units. I can sell maximum 60,000 units in external market. Okay, so it means that we have 40,000 spare capacity. We have this 40% spare capacity, है ना? Unused machine or unused capacity we have. So if the organization have this spare capacity in their organization, if they have this spare capacity, for such spare capacity, if division B demands some product, like division B is demanding 30,000 unit, okay, 30,000 unit, and we know that division A have spare capacity, division B can produce 40 more units. Okay, so in such case the organization should continue their production, and the organization should keep the transfer price, the minimum transfer price which the manager A can quote should be the minimum transfer price which the manager of division A can quote is the marginal cost. Okay, marginal cost, the marginal cost. Okay, for example, I can produce, for example, we are talking about the product B which we are transferring from division A to division B. We are talking about this product. We're talking about this product P, and we know the variable cost or the marginal cost for the production of product P is, for example, it is ₹7. We know that. Okay. So in such case, it is good to recover even the marginal cost if you have unused capacity. So if you have unused capacity, that is, we have 40,000 unused capacity, and for that division B is demanding 30,000 units. So for that we can quote, at least we want to recover the marginal cost. Okay. So in this case, we can quote our transfer pricing, minimum transfer pricing, which we can quote is the marginal cost, that is ₹7. We can quote this price. Okay. This is the case when any of the division have the spare capacity. They have right now, they have spare capacity. So the minimum cost which they can, the minimum transfer pricing they can decide is the marginal cost. Okay. But what if, yeah, what is the maximum transfer price? See, this is the minimum transfer price, marginal cost they can quote. What is the maximum transfer price? Now see, let us see the maximum transfer price. Okay. What the maximum transfer price they can quote. For example, the division A can sell their product in the market. For this, we will see two things. The price at which we can sell. See, for this, we will see for division B, the price at which he can sell the product in the market. Okay. The price he can sell, the price at which he can sell the product he's manufacturing in the market. Okay. For example, he can sell it at ₹20. Okay. This is the market price of the product which he can sell after the production. Okay. And apart from all the cost, if division B required to manufacture further processing, for further processing he need to incur ₹4. Okay. So in such case, we will decide this maximum transfer pricing as the external buy-in price or lower of marginal revenue, lower of net marginal revenue. I will explain this with the help of an example. We have a question related to this, and we will understand this with the help of an example. Okay, with the help of which we can find the maximum price. Okay, maximum transfer price. Now, what if the organization don't have spare capacity? See, in this case, we have a spare capacity of 40,000. In case if the organization don't have the spare capacity, for example, we know 1 lakh units, the division A is producing 1 lakh unit, and the external, and this entire 1 lakh unit they can sell to the external market. Okay, so in such case, what will be the transfer price? The minimum transfer price will be the marginal cost plus, for example, division B is demanding for 30,000 units. For selling this 30,000 unit from division A to division B, division A has to stop 30,000 of its sale to external market. And for that, the business organization is losing contribution here. This is the opportunity cost. If they will stop selling 30,000 units to external market because they want to supply this 30,000 unit to division B, so in such case, they are losing the contribution which they want to recover from the transfer pricing when they are transferring 30,000 unit from division A to division B. Okay, so this will be the contribution which they want to recover. Okay, this is the opportunity cost. Okay, so the minimum cost, if there is no spare capacity, you can see here that they have capacity to produce 1 lakh unit, and they are selling the entire 1 lakh. They can sell the entire 1 lakh unit to external market. Okay, so in such case, you can see there is no spare capacity. So in such case, if they want to transfer 30,000 unit to division B, they have to stop 30,000 unit to the external market, and for that they want to recover the contribution which they are losing here. Okay, that will be opportunity cost. So the minimum cost in this case will be marginal cost plus opportunity cost. Okay, so this is how you will calculate. You will consider the capacity of the business organization, and with the help of which you will find the minimum transfer pricing. But yes, for maximum transfer pricing, you have to consider more things. What is the external what is the price at which you can sell your product to the external market? Okay, considering that, you will find the maximum transfer pricing. For that, we will consider an example. Okay, so I hope it is clear to all of you. Now let us take quickly an example. This is the example I have with me. So I want all of you to read this example, and I want all of you to give me the answer if you can give. Okay, please see this question. Read this question and try to give me the answer. Read this question and try to give me the answer for this question. Maximum transfer price, we will discuss this with the help of an example. But before that, I want all of you to please read this question. Let me do this in 2 pages. So this is the question which we have, and I want all of you to please read this question. Okay, I'm giving you time. First, you read this question, then we will discuss this. Quickly read this and tell me if you have done the reading of this question. Quickly read this. See, we have this question. Quickly, just give a read it. If you have done the reading, please let me know that you have done the reading of this question quickly. Quickly tell me if you have done the reading of this question. Please tell me you have done the reading. Okay, let us discuss. Centurion company operates a pulp division. We have a company, it operates a pulp division that manufacture wood pulp for use in production of various paper goods. The following information are available to us. Selling price is given, variable expenses given, we have the contribution, we have fixed expenses, and we have net income. Okay. Now Centurion company has just acquired a small company that manufacture paper cartons. This company will be treated as a division of Centurion with full profit responsibility. Okay. So you can see the company will be treated as a division with full profit responsibility. Newly formed carton division is currently purchasing 10,000 kg of pulp per year from supplier at a cost of rupees 210 per kg less 10% quantity discount. Centurion's president is anxious that carton division begins purchasing its pulp from pulp division if an acceptable transfer pricing can be worked out. So we have a situation 1. You can see here, this is the situation we have. This is the situation we have. You can see here, we have a pulp division. Okay, we have a pulp division, and the capacity of this pulp is 1 lakh kg in a year. So we have taken their capacity as 1 lakh. Okay, variable cost of producing the pulp is what? 126. So we have taken this variable cost here. Okay, now they're selling this 1 lakh pulp in the market for rupees 210. Okay, they're selling it in the market. They are selling this 1 lakh kg pulp in the market for rupees 210. Okay, so it means that they don't have any spare capacity. They are using their entire capacity, means they can produce 1 lakh unit, and they are selling the entire 1 lakh unit in the market. Okay, for rupees 210. Okay, now what happened? This company, this organization has purchased any other company in which they have this carton division, in which you are preparing this paper cartons, and for that you need pulp paper, paper pulp. Okay, so they need 10,000 kg pulp, and they have option to buy this 10,000 kg pulp from the market. Okay, and from the market you're getting 10% discount if you're buying 10,000 kg pulp from the market. Okay, ji. Now you can see the condition, situation 1. This is the question you have. Okay, you can read the question again. You have this question. You can read this question. The capacity of division, this pulp division is 1 lakh. It is clearly written here. The external market for that, the price in external market is 210. Variable cost is this. Everything is given in the question. You can see here, this company operates a pulp division that manufacture wood pulp. Okay, this is the wood pulp. The wood pulp the company is manufacturing. For use in production of various paper goods. And the following information is related to wood pulp. The sale price, variable expenses, contribution, fixed expenses, and capacity is also given. So all the information are given. Now what is situation 1? If pulp division is in a position to sell all its pulp to outside customer, so you can see here, situation 1 is given. If this pulp division, they can sell its all the units, they have capacity to produce 1 lakh unit, they have capacity to produce this 1 lakh unit, and they can sell this all the units to the market. If pulp division is in a position to sell all its pulp to outside customer, they have option to sell all 1 lakh unit to outside customer at the normal price of rupees 210, and they can sell it for rupees 210. It is given here. Will the managers of cartons, this manager, will the manager present here, will the manager of carton and pulp division and the manager present here, these two manager, will these two manager agree to transfer 10,000 kg of pulp paper next year? So whether both of them will agree to transfer 10,000 kg or not? First question is that, because they have the market for the entire 1 lakh kg of paper pulp which they are producing. They have market. They can sell the entire product in the market for 1 lakh. So they are asking you whether both the manager will agree to transfer 10,000 kg of pulp in next year, at a determined price. Explain with reason. So can you give me the answer of this question? Can you give me the answer of this question? I'm waiting for you to give me the answer. Yeah, I got answer. So this carton division can buy the pulp from the external market at rupees 189. They can buy it from external market at rupees 189. Now tell me whether, see, for, you can see here in this question, they are using their entire capacity, means there is no spare capacity. If there is no spare capacity, then what will be the minimum transfer price? Tell me the minimum transfer price at which the manager of pulp division will agree to transfer 10,000 kg of pulp. What will be the minimum transfer price that the manager will quote? The manager of pulp division. Tell me quickly. I want all of you to give me the answer. How to find? We have two conditions. We have already discussed that we have two conditions. We have already discussed. Where is that paper? Yeah. No. Yeah, this is the condition we have discussed. We have already discussed here that two conditions may arise. One, when the organization have spare capacity. If the organization have spare capacity, minimum price will be the marginal cost. But if we are using the entire capacity, means you can produce 1 lakh unit and you can sell entire 1 lakh unit to the market. In that case, if other division is demanding you product, in that case we will charge marginal cost plus any contribution which we are losing, ठीक है, because of transfer of the goods to the respective division, ठीक है, we want to recover that. For example, if I'm losing 30,000 units here because division B is demanding 30,000 units, so that is why I can't sell my entire 1 lakh unit to the market, because I have to produce 30,000 unit for division B. For that, whatever contribution I'm losing on 30,000 unit, whatever the contribution I'm losing here, I want to recover it. Okay, so I will recover it from the transfer pricing. So in that case, what will be the minimum transfer pricing? Marginal cost plus opportunity cost. So it means that first you have to check whether the organization have the spare capacity or not, which you can see here. If you can see, you can see here. You can see here that the organization has capacity of 1 lakh and they can sell entire 1 lakh unit to the market. It means that they don't have spare capacity. So what will be the minimum transfer pricing? Marginal cost plus opportunity cost. Any contribution which you are losing because you are transferring the goods at this price. है ना? Give me the minimum price. If you can give me, I'm waiting for you to reply me. Quickly tell me. Can you give me the answer? What will be the minimum price that the manager of pulp division will charge? First, tell me the minimum transfer price which the manager of pulp division will charge. Yes, I got answer from Raman. Raman is saying it's 210. Ambika is saying 210. Okay. Anjali is saying 210. Okay. So you can see here what will be the minimum transfer price. See, if we don't have spare capacity, then obviously my production will, for producing this 10,000 unit, I have to stop the production of 10,000 unit for transferring it to the market, for selling it to the market. Okay. So I will not sell my 10,000 unit here. Okay. In that 10,000 unit, I'm losing my contribution. How much? 210 minus 126. I'm losing this contribution. So I want to recover this contribution from here. Okay. What is this contribution? Can you give me the answer? 4. What is this difference? Can you give me 94? 84. Okay, so this is the contribution I'm losing. Okay, so I want to recover this contribution. This is my opportunity cost. I want to recover this. And what is my minimum cost? The minimum cost I will charge is the variable cost. I want to recover this 126. Okay, plus since I'm using on this 10,000, I'm using this contribution 84. So I want to recover this contribution. Why should I supply this 10,000 unit to the manager of division, carton division, if I'm getting more contribution from the market? Okay. So the minimum transfer pricing they will quote is rupees 210. The minimum transfer price of the manager of pulp division will quote as 210. But the manager of carton division, he can buy the same product from the external market at rupees 189. Okay. So now manager of pulp division, he will say, see, I will not transfer you the goods at a price less than 210. I will not transfer the goods to you at a price less than 210. Why? Because why should I reduce the price? I can sell the same good in the market for rupees 210. I'm losing my opportunity cost. I'm losing my contribution. I want to recover that. Why should I transfer the goods to you? Okay? So in this way, he will argue, and he don't want to reduce his transfer price below 210. He don't want to reduce his transfer price. Okay, he don't want to reduce the price of these goods, which 10,000 goods which he's transferring from pulp division to cartons division. He don't want to reduce it. On the other hand, since the manager of carton division, he can purchase the same good from the external market at rupees 189. He can buy the goods from the external market at rupees 189. So he will argue that since I can purchase the same product from the external market at rupees 189, why should I give you price more than 189? So in this way, he don't want to reduce the price less than 210, and he don't want to increase the price more than 189. So what happened? They will not they will not agree to transfer the goods from one division to another division. You can see here, the manager of pulp division, he will not agree to reduce the price of the goods or services goods below 210. He will not agree. Similarly, the manager of carton division, he will not agree to increase the price beyond 189. So this transaction will not materialize between them. They will not agree to transfer the goods. I hope it is clear. I hope it is clear to all of you. Yes, in this situation, for the manager of, for the entire, okay, let's consider the goal congruence. For the profitability of entire organization, if we want to consider in this present situation, let us consider the goal congruence. If we want to consider the profitability of entire organization, means it should be profitable for the manager of pulp division, and it should be profitable for the manager of carton division, and should be profitable to the entire organization. Such decision we want to take. If we want to take such decision, in such case, it is good for the manager of pulp division to transfer the entire good to external market, because in that way he will earn more profit. Similarly, it is good for the manager of carton division to buy the goods from the external market. So in this way, the profitability of entire organization will improve, है ना? So it is good for the manager of carton division to buy the goods from external market, and it is good for the pulp division to sell the goods to external market. That will improve, not just improve the profitability of pulp division. You can see that will not just improve the profitability of pulp division, that will not just improve the profitability of carton division, but also the profitability of entire organization. And always remember that we always want to use our resources in best possible manner. We want to get the maximum profit from the resources we have. Okay, so the resources which we have, we want to get the maximum benefit. So in this way, the entire organization is getting maximum benefit, and that will improve the profitability of entire organization. That is the goal congruence. Okay, now let us consider the second situation. So no mutually agreeable transfer price will take place between them. No transfer will take place. Okay, both of them will not agree, and obviously it is not a good situation. Okay, what is good for the organization? For pulp division, sell entire product to outside market. For carton division, buy the product from the external market. Okay, so in this way, the profitability of entire organization will improve. Now read the second situation. Okay, this is the second situation. Read this. I'm giving you 2-minute time again, and you give me the answer. Okay? And I want all of you to give me the answer. Okay, I got answer from Ambika Raman, and I expect all the student to give me the answer. Okay, I got answer from Anjali. Please give me more answer. Give me more answer. Okay, let us discuss. See, in this case, you can see here that the pulp division, the capacity of pulp division is to produce 1 lakh units, 1 lakh kg of pulp. They can produce 1 lakh kg of pulp, while the external market for this product is just 60,000 kg. ठीक है, assuming that the pulp division is currently selling only 60,000 kg of pulp each year. So the external market for this pulp division is just 60,000 kg. ठीक है, and the price at which they can sell this product in the market is 210. Now they are asking you whether the manager will agree to transfer 10,000 units or not. Okay. So in this case, first you can observe here that the organization have spare capacity. You can see the organization have unused capacity. How much unused capacity? They can produce 40,000 more pulp. है ना? They can produce and sell 40,000 more 40,000 kg more pulp. ठीक है. However, there is requirement of just 10,000 kg pulp from carton division. So what we have discussed if the organization we have so far we have discussed that if in our organization any division have a spare capacity, then what will be the minimum transfer price? If the organization have spare capacity, pulp division have spare capacity, so what will be the minimum transfer price? What price they will quote? The minimum price which the pulp division can quote for the pulp. ठीक है, what will be the minimum price if there is spare capacity? You can see here the spare capacity. In such case, they can quote what? Give me the answer. What they can quote here? Yes, they can quote marginal cost. ठीक है, and the marginal cost here for them is rupees 126. ठीक है, so this is the minimum price which the pulp division will quote. Okay, while you can see here that the carton division can buy this pulp from the external market at rupees 210 minus 10%, that is 189. ठीक है, so they can pay maximum 189 for the pulp which is required for the further production. ठीक है, so you can see here that the manager of carton division maximum price which he ready to give, the maximum price which he ready to give is rupees 189. The maximum price which he is ready to give is 189, while the minimum price the manager of pulp division will quote is rupees 126. The minimum price that manager of pulp division will quote is rupees 126, and the maximum price that the manager of carton division will quote is rupees 189. So what will be the price? What will be the transfer price in this case? You can see here that we have a range of transfer price in between from 126 to 126 to 189. You can quote any transfer price between this, in between this range. ठीक है, both of them can agree any of the price in between this range. Okay, so I hope it is clear to all of you. I hope it is clear to all of you. I hope it is clear to all of you. ठीक है? One more example. This is the example which we have. One more example. There is a query of Ambika. Ambika, I will take your query later on with an example. We will understand the query which you have. ठीक है? With an example. Give me the answer of third, situation third, write situation third, and then give me the answer. I hope you can see here in situation 2, we will not give one specific transfer price that the price should be 126 or 189, not like that. We will say the minimum price the manager of Pulp division is willing to receive is 126, but the maximum price that the manager of carton division is willing to pay is rupees 189. So the transfer price will be in between this range somewhere. Okay. Now the third portion of the question. This is the third portion. Please read it and give me the answer. Please read it and give me the answer. Read it and give me the answer. Please read it and give me the answer. Quickly. I'm waiting for you to give me the answer. Quickly give me the answer. Shall we discuss? Can you give me the answer? I didn't receive any answer. Okay, I got answer from Kunal Anjali Raman. Okay, now let us see this. See, you can see here in this question, the organization capacity is to produce 1 lakh unit and the external market is still 60,000. It means that they still have the spare capacity. Okay. Always remember, if you have unused capacity, if you have spare capacity, you can quote the minimum price. You can quote here the minimum price as the marginal cost. You can quote here the minimum price as the marginal cost. Marginal cost will be the minimum price. ठीक है. Now, if outside supplier of the carton division reduces its price, previously what was the price? 210 minus 10%. Now they have reduced the price to rupees 177 per kg. Will the pulp division meet this price? Pulp division, can is it possible for them to supply this product at rupees 177? Tell me yes or no. ठीक है. See, the pulp division can quote the minimum price as the marginal cost, which is rupees 126. They can quote this price. Why they can quote this price? Because they still have unused capacity. You can see here, they can still produce 40,000 kg of pulp. They still have unused capacity, and for that unused capacity they can produce and sell the goods at marginal cost. The minimum price for that will be the marginal cost. Okay, so yes, if this carton division is buying the product from external market at rupees 177, the pulp division can also supply the same product. It is possible for them to supply the same product at rupees 177 because they can quote the minimum price which they want to recover from this transfer is rupees 126. So above this price they can charge anything. Above this they can charge anything, but below this they never want to go below this price. This is the minimum price they want to recover from their product. They don't want to go below this. ठीक है? The manager of pulp division will not go below this. ठीक है? He will recover minimum this price. ठीक है? But yes, he can increase the price beyond this. ठीक है? So 177, yes, it is possible for pulp division to supply this 10,000 kg of pulp at rupees 177. It is possible for that. And if they are supplying this product at 177, they will earn contribution of rupees 51. Enough? Because this is the minimum price they want to charge. And if they are actually charging transfer price as rupees 177, so obviously they are earning contribution here. ठीक है? What contribution? Rupees 51 per kg. This is the contribution they are earning. ठीक है? And on 10,000 units, they are earning 10,000 into 51. This contribution they are earning. Okay. So if pulp division does not. So I hope it is clear. You can ask me. Any question if you have in your mind, you can ask me. Okay, there is a question from Ravi Teja. Let me take that question. See, while if you will see the question, you can see in the question, the fixed cost is given in the question. The fixed cost is given 54. So there is a doubt from a student. Let me take that doubt. Ravi Teja, he's asking me, ma'am, why they have contribution here? Why he's saying, ma'am, why you have considered only variable cost? Why you have considered the variable cost, which is rupees 126, while we have in the question the fixed cost? Fixed cost is what? Fixed cost is what? It is 54. In the question, it is mentioned the fixed cost is 54. So the total cost for the organization is what? 180. This is the total cost. He's saying, ma'am, total cost is this. For pulp division, the total cost is rupees 180. Okay? Then why should the manager of paper pulp division will agree to transfer the product whose total cost is rupees 180? Why will he agree to transfer it, the transfer price at rupees 177? In such case, he will incur a loss of rupees 3. He's saying this. Why will he agree? He's saying, see, we always check the capacity. We always check the capacity of the division. The division is transferring the goods or services. Okay? So this division is transferring the goods and services. You can see here. See, I can say here that the fixed cost is not relevant for taking decision. Why? Why, ma'am? Fixed cost is not relevant for taking decision because whether you accept this proposal or not accept the proposal, okay, you have to incur that fixed cost. Whether, see, they have capacity to produce 1 lakh unit, but they can sell maximum unit to the market 60,000 unit. The maximum demand in the market is 60,000. So you can sell maximum 60,000 unit in external market. Okay? So the fixed cost you are incurring, fixed cost, whether you sell this 10,000 unit to the carton division or not. Okay? Whether you transfer this 10,000 unit to carton division or not, this pulp division will have to incur this fixed cost. Irrelevant. This fixed cost is not relevant for taking decision. I hope you have studied this in decision making also. Okay? That any cost which is not relevant for taking some specific proposal. For this proposal, this cost is not relevant. Whether you accept this proposal or you don't accept this proposal, you have to incur this cost. Such cost is sunk cost. It is irrelevant for taking decision. So in this case, you can see here, though organization is having fixed cost also. See, their variable cost is rupees 126, but in the question it is mentioned that the fixed cost is rupees 54. It means that the total cost is rupees 180. But I'm saying that for the specific proposal means transfer of the 10,000 kg unit from one division to another division. For the specific proposal, you don't need to consider this fixed cost. Why? Because this is irrelevant. Why? Because whether you accept this proposal or not accept this proposal, organization will have to incur this fixed cost. I hope it is clear. Since you have to incur this fixed cost, whether you accept the proposal, whether you don't accept the proposal, you have to incur this fixed cost. So this fixed cost is not relevant for us to take decision. And that is why we have already discussed that in case if you have spare capacity, see, you can see here, you have a spare capacity. You can produce more 40,000 kg of pulp. You have spare capacity. So in case if you have a spare capacity, your minimum transfer price will be just marginal cost, variable cost you have, or marginal cost. Marginal cost will be your minimum price. So that is why we are saying that we will consider the transfer price, the minimum transfer price which we will consider here is rupees 126. Okay, we want to recover from this proposal the variable cost, the minimum price. Okay, so while this carton division is buying the same product from the market at rupees 177. Okay, so you can quote this the minimum price. This is the minimum price which you can quote, but you have option to quote rupees 177. So if you will quote this 177, you will have contribution of rupees 126. Sorry, what will be the contribution? 54, 51, I guess. Yeah, 51. I hope it is clear or not. I hope it is clear. If it is not clear, please tell me. Quickly tell me it is clear or not. Oh shit, where is my internet? Quickly tell me it is clear. It is clear or not? Quickly tell me. See, for the situation 3, we will consider the external demand as 60,000. See, in this question, you will consider the external demand as 60,000. And in case if you have any doubt in your mind, please give a note in your solution that you are considering the external demand as 60,000 kg. Okay, in the solution, give a note that you are considering the external demand as 60,000 kg. Or otherwise, you can give answer in two way. You can write that in case if the external demand is 60,000 kg, write the answer accordingly. In case if the external demand is 1 lakh kg, you can write the answer accordingly, because in the question it is not mentioned. Okay, so I hope it is clear to all of you. Shall we proceed to next question? If you have any doubt, you can ask me. In this case, we have considered the external demand as 60,000 kg. You can write it and give a note in the solution. Okay, while writing it in examination, you can write it that you are considering the external demand for this product as 60,000. Okay. So I hope it is clear. This is a question from Vasanti from Trichy. Okay, I hope your query is clear. And I hope, Ambika, your query is clear. Okay, we have considered here that the external demand is 60,000. Since it is not mentioned in the situation, so you can write it a note in the solution that you are considering the external demand as 60,000 kg, and accordingly you are writing the answer. Okay. Otherwise, you have option to write the answer in two way. You can consider the external demand as 1 lakh and then you can write the answer. Then you can consider the external demand as 60,000 kg and you can write the answer accordingly. Okay. Now let us proceed. Let us do the next question. Goal congruence. Let us do a question related to goal congruence. We have this question and we will understand the meaning of goal congruence with the help of this question. And before doing this question, let me give you a clarification. If you have downloaded the file from the ICAI website, there is an error. I have pasted a wrong image at this place. So please do this correction. Okay, I have placed a wrong image at this place. Okay, so please do this two correction. Okay, while doing the solution, and with the help of this solution, we will understand the meaning of goal congruence. Okay, so first of all, I want all of you to read this question. Okay, read this example. Okay, I'm giving you time. Please read this. I'm giving you 5 minutes to read this question. Please read it. read this question quickly and tell me if you have done the reading, and we will understand the meaning of goal congruence with the help of this question. So if you have done reading of this question, please let me know. And we will understand the meaning of this. See, we have not understand the meaning of this, and I will explain you the meaning of this line. Okay, maximum, for deciding the maximum transfer price, lower of net marginal revenue and external buy-in price. What is the meaning of this? We will understand with the help of this example. Okay, I will tell you how to find the maximum transfer price considering the net marginal revenue and external buy-in price, because it was not mentioned previously, so we have not considered that, but we will understand this with the help of this example. So first of all, I want all of you to please read this example and let me know if you have done the reading. Okay, if you have done, and please don't see the image you have which you have downloaded from ICAI. Please check, there is these two correction. I have pasted a wrong image there, so please do this correction. Okay, and if it is possible for you, try to do this at your own, and let us discuss this then. Okay, if you have done the reading or if you have tried it, please let me know. Okay, reading is done, Ambika. Okay. Now in this image, you can see reading is done by other student also or not? Please tell me, other student. Reading is done by other student or not? Quickly tell me. Reading is, yeah, reading is done by, okay. Now see, division A, transfer goods to division B, incur marginal cost of rupees 10 per unit. So division A is incurring marginal cost of rupees 10 per unit for the goods which they are producing in their division. Okay? And division B incur marginal cost of rupees 5 per unit to process it further. Remember, for the further processing, okay, means this is the additional marginal cost which you are incurring here in division B for further processing of the goods. Okay, it is clearly mentioned here. Okay, rupees 5 to process it further. Division B sell the finished product externally at rupees 20 per unit. This division B is selling this goods to external market at rupees 20 per unit. Okay, now to promote goal congruence, what should be the minimum transfer price that division A should charge? Okay, remember the word written here clearly is goal congruence, means you should try to increase the profit of division A, profit of division B, and profit of entire organization. We want to increase the profit of division A, B, and entire organization. We want to keep the transfer pricing such that the profitability of entire organization should also improve. Okay? So this is the meaning of goal congruence. Now see here, what should be the minimum transfer price that division A should charge? Minimum transfer price for the goods which you are transferring from division A to division B. Assume there is no external market for the intermediate product. Remember, few things before solving the question is what? Few thing is that to first is to check their capacity. ठीक है, what is their capacity, what is the demand in the market, है ना. But since it is clearly written here, there is no demand. External demand means whatever they are producing, they will transfer it to division B. Whatever division A is producing, they will transfer all the goods to division B. ठीक है, there is no external market for the product of division A. ठीक है. Now in such case, what will be the transfer price? What will be the transfer price? ठीक है. So in this case, don't write the answer, oh ma'am, ₹10. No, write what, try to find out the minimum price. See, division A, the minimum price he will charge, minimum price, and the maximum price he is willing to pay. Try to find out. ठीक है, the minimum price A is willing to charge and the maximum price B is willing to pay. ठीक है. So you can see here that since the manager of division A, he can't sell the product to external market. ठीक है, this manager, he can't sell the product to external market. There is no market for this product. So in such case, the entire capacity, whatever you have the capacity to produce the goods, you have to produce entire goods for division B. So the minimum price will be what? Variable cost, ₹10. ठीक है, ₹10. ठीक है, the minimum price he will charge this. What will be the maximum price he will charge? He will say, see, we can sell the final good, finished good in the market for ₹20. ठीक है, and we need to do further processing. Whatever the input which we are receiving, we need to do further processing on it, and we have to incur ₹5. So this is the contribution. This is the maximum price. Sorry, this is the maximum price we are willing to charge, because at this price we are having no loss. If you will charge more than this price, for example, if you will charge 20 rupees, 18 rupees, for example, if you will charge more than 15, okay, for example, if you are charging 18, in such case, the organization will incur a loss of ₹3. So this division want to charge such maximum price so that no loss, so that there is no loss for division B. ठीक है, no loss. ठीक है, so what they will say the final product which we are producing, we can sell it to the external market at ₹20, and we need to incur some variable cost on it, that is ₹5. So the maximum price we are willing to pay is 15, not more than that. If we will pay more than ₹15, for example, if we will pay ₹18, if the transfer price is more than 15, in such case we will incur loss. ठीक है, so they want to charge maximum price in such a way that there is no loss. There is no loss. They want to charge maximum price such price so that there is no loss. There is no loss. ठीक है, so that there is no loss. So in this case, you can see here, the maximum price division B is willing to pay is ₹15, not more than that. Because if the transfer price will be more than 15, in such case, they will incur loss, and they want to avoid that loss. Okay? So you can see here, if you want to give the transfer price, don't write answer like, yeah, the transfer price should be ₹10. No. Okay? Say there is a range of transfer price. There is a range of transfer price. ठीक है, the minimum price which the division manager of division A is willing to recover is ₹10, and the maximum price which the manager of division B is willing to pay is ₹15. So this is the price range for the transfer price. ठीक है, so the transfer price will be more than 10 but less than 15. This will be the transfer price. I hope it is clear. Now in this case, you can see, if you have query, you can ask me. Now in this case, you can see here, what we have considered? We have considered the selling price per unit minus the marginal cost to the purchase division. The marginal, this is the additional process cost. Okay, so what is this marginal revenue here? The net marginal revenue at this place. The net marginal revenue is what? The external selling price minus the additional variable cost you are incurring. This, okay, the selling price, marginal revenue, selling price of the final good, finished good, okay, and the marginal cost for the processing cost of division B, this division, okay, you will consider that. You will get here, this is the value of marginal revenue. And in case, for example, you can buy the product from the external market at rupees, for example, you can buy the product from external market at rupees 14. So in such case, you have two options. Here the value is rupees 15 and the external buy in price is rupees 14. For example, it is not mentioned here, but for example, if we have, then what will we consider? We will consider the minimum of these two value, lower of these two value. But since we don't have this price, so lower value is this itself, 15 rupees. Okay, what is this external buy in price net? External buy in price net is what? If we will not buy this product from division A and we are buying the same product from external market, so we will see the price which we will pay to external market and the internal net, this revenue. I hope it is clear. I hope it is clear to all of you. If it is not clear, please tell me. I will repeat it again. Okay? If it is not clear to all of you, I will repeat it again. Please tell me. If it is not clear, please tell me. If you have any doubt, you can ask me. And if there is any doubt related to this topic, you can ask me. Okay, there is a query from, if you have any query, you can ask me. There is a query from Ambika. See, there is a query from Ambika. Again, you are asking me, ma'am, there might be some fixed cost. Okay. Again, you are saying, ma'am, apart from this variable cost, there might be some fixed cost. See, we will not consider fixed cost. Why? Because that cost is a sunk cost here, irrelevant for us. Why irrelevant? Because whether you take this proposal or not, it will not affect our decision. Okay, you have already incurred that fixed cost. Okay, what is the sunk cost? Sunk cost is a cost which you have incurred in past. Fixed cost, you have already incurred that cost. Okay, now whether you transfer these goods or not, okay, you have to incur, you have already incurred that cost, and this proposal will not affect your that decision. Okay, you have already incurred that cost and this proposal will not affect that, and that is why we are not considering that here. Okay, we will not consider. We will consider only relevant costs. So we are considering here the variable cost. We will not consider the fixed cost at this place also, because we have already incurred that cost in past. Okay, so we will not consider that. We will just consider the relevant cost. ठीक है जी? I hope it is clear why we have not considered the fixed cost in previous question, previous example also, and why we will not consider the fixed cost again in this example. Why we will not consider that? Because whether you take this proposal or not, whether you receive the goods from here or from external market, it will not affect the decision of incurring the fixed cost. You have already incurred that fixed cost. Okay, so that will remain same. Okay, and that is why it is not required to consider that. Okay, it is sunk cost. Any other doubt you can ask me? Shall we proceed to next example? We have many questions to do. Let us do the next one. Let us do this question. And this question, I want all of you to do this question. ठीक है जी? So we have this example, two case here. ठीक है? Please, if you have downloaded the image from ICAI website, please. There is some error. I have pasted a wrong image there. So please do the correction. ठीक है? These two correction and try to do this question at your own. Give me the answer quickly. I want all of you to give me the answer quickly. Okay, there is a doubt. Preeti is saying, can you please explain the net marginal revenue? Yes, we can understand net marginal revenue. I will explain the same thing in this example also. Okay. You have asked me, Preeti is asking me, can you please explain the net marginal revenue again? Yes, we can understand this here. For deciding the maximum price for division B, we will try to find the net marginal revenue. What is the net marginal revenue? You will consider the selling price of the final good you have. You can see here the selling price of the final good is 20 rupees. You can sell the final good in the market for rupees 20. And the further processing cost in division B, the variable for the processing cost is rupees 5. Okay, if you will consider this, you will get what? 15 rupees. Okay, so 15 is the net marginal revenue. This is the net marginal revenue. What is this? If you will see here how to decide the maximum, you can see here how to decide the maximum transfer price. There are two ways. You will consider either the net marginal revenue or the external buy-in price. Okay, and you will consider the lower of them. So what is this net marginal revenue? Net marginal revenue is what? Selling price of the final goods which you are selling in the market minus the marginal cost, the additional processing cost, the additional marginal cost which you are incurring in your this division, okay, in which you are selling the final product. Okay, so you will consider those two things and you will get the net marginal revenue. And for example, here, if you can see, what is the net marginal revenue? Net marginal revenue is the final product, the selling price of the final product minus the further processing cost. So selling price of the final product minus the further processing cost, you will get here the net marginal revenue. This is the net marginal revenue. Or we have two options. Either consider this or consider what? Consider the external buy-in price. Can you see here what is the external buy-in price? The 14 rupees is the external buy-in price. External buy-in price is what? Rupees 14. Rupees 14 is the external buy-in price. And what will you do? You will consider lower of these two values, the value which is low. Take out of these two values. So which value is low? This one. So this is the maximum price which you will charge for division B. Okay. By the way, I won't answer from all of you, but since you asked me to explain this net marginal revenue, I have taken this example. But I want all of you to give me the answer of this second portion of the question. I want all of you to give me the answer of second portion of your question. Okay, ji? I want you to do this at your own and give me the answer quickly. Quickly give me the answer. So you have to quote the maximum price. For example, in this case, we have discussed the maximum price. Similarly, give me the maximum price for the next case. It's so simple. But I want all of you to do this at your own. Okay, I want other student also to give me the answer, and we have two cases here. In one case, if the purchase price is rupees 14, then what will be the maximum transfer price? And in second case, if the external purchase price is rupees 18, then in that case also, what will be the maximum transfer price? Give me the answer in both the cases quickly. Okay, I'm waiting for you to give me the answer. Quickly give me the answer. Quickly. Okay, I know it's very simple. So quickly give me the answer. I'm waiting for you to give me the answer. Okay, I got answer from Raman, Ravi Teja, and Ambika. Other student, I'm waiting for other student also to give me the answer. Other student also to give me the answer quickly. I hope it is clear. I hope the transfer pricing chapter is clear to all of you. Yeah, I got answer from Preeti also. So in case if we consider the second case, in second case also, we will consider the for deciding the maximum transfer pricing. Since in the question they have asked you to decide the maximum transfer price. See, the minimum transfer price is rupees 10. Why it is rupees 10? The minimum transfer price is rupees 10 because there external market. So the division A will transfer the goods at minimum price of rupees 10. This is the marginal cost we have. Similarly, in the next case also the minimum transfer price is rupees 10. No need to discuss this, and since in the question they are not asking, so it is not mentioned anywhere in the answer. Okay, they have just asked you to quote the maximum transfer price. Now here for deciding the maximum transfer price, we have a method. First we will calculate the net marginal revenue. Then we will see the external buy-in price, and we will consider the lower out of this value. Okay? So you can see here, you can sell the final product in the market for rupees 20, and the excess, the further processing variable cost which we are incurring here is rupees 5. So rupees 15 is the net marginal revenue here. Rupees 15 is the net marginal revenue. Okay, and the external buy-in price is rupees 14. So lower value is rupees 14. So the maximum, this is the maximum transfer price which you will quote in this first case. Okay. In second case, if the purchase price is rupees 18, in this case, you can first calculate the net marginal revenue. How can you calculate that net marginal revenue? You will consider the selling price of the final product, which is rupees 20. Then you will consider the marginal cost, the further processing cost of division B, TKG, which is rupees 5. So in this way, you will get what? You will get here the net marginal revenue, which is rupees 15. And the external buy-in price is what here? Rupees 18. So you will consider the minimum of these two values, which is rupees 15. So the maximum transfer price in this case will be rupees 15. So simple. Is it? I hope it is clear to all of you. Now let us do the third case. Okay, now let us do the third case. We have, do this question. Read it, try to do this question, then we will discuss. First, try to do this at your own. Okay, I got answer from Muthu Lakshmi from Madurai. Okay, very good. So you people are giving me right answer. Very good. Very nice. Very good. Now please do the third case. Okay. And in case if you feel my speed is fast, please tell me, ma'am, go slowly. Okay. So in case if you feel my speed is fast, tell me. Okay. Do this question. I'm waiting for you to first try it at your own, then we will discuss. Okay. Read it. Try to do this at your own, then we will discuss. Please tell me quickly the answer of this portion. Quickly, quickly. I hope you have done this. So in this question, assume that intermediate goods of division A can be sold externally at rupees. Since in previous question, you can see there were no external market. But in this case, they have mentioned you that there is external market and you can sell the same product in external market for rupees 12. Okay, how does opportunity cost affect the transfer price? Now, in this case, you have to consider the opportunity cost. Okay, and they're asking you how it will affect your transfer price. Obviously, this will affect your minimum transfer pricing, the minimum price which you quote for the product you want to transfer from division A. Okay, how does the opportunity cost affect the transfer price range? Okay, your transfer price range will get affected when division B can procure the part from externally for rupees 14. And in the same question, they have also mentioned you the division B can also buy this product externally for rupees 14. So now tell me what will be the price range in this case? What will be the price range? What will be the price range? Okay, now you're asking me, ma'am, here, is there any spare capacity? Since it is not mentioned, So we will assume that the entire unit which they are producing, they are capable of selling them in external market, because they have mentioned you that the external market exists. So it means the entire capacity, the entire unit which you are producing in division A, you can sell it to external market. Think in this way. Okay. You can write it in answer also to clarify the situation. You can write it in the solution that we are assuming that the organization is capable of selling its entire capacity to external market. You can write it. You can give this clarification in solution. So can you give me the answer? Okay, I got answer from many student. I got answer from Ambika, Ravi Teja, Preeti. Very good. Nee, I didn't get the answer from Preeti, but yeah, try to do this. Try to do this. Try to find the minimum transfer price as well as try to find the maximum transfer price. Try to do this. Okay. I got answer from Mathulakshmi. Muthulakshmi, I hope I'm pronouncing your name correctly. Ravi Teja from Hyderabad. Very nice. Very nice. Other student, I expect other student also to give me the answer. Other student also to give me the answer. I expect other student also to give me the answer. Very nice. Preeti, other student, please try to apply your brain and try to find out, at least give me the maximum transfer price. I hope it is clear to you to decide the maximum transfer price. Give me the answer. Okay, let us discuss this. See, for deciding the maximum transfer pricing, what you do, same thing. You will first try to find out the net marginal revenue. How will you find the net marginal revenue? You will see the external selling price of the final good at which you can sell the product in the market. And the excess further processing cost which you are incurring here is marginal cost, which is rupees 5. So you can see here, this is your rupees 15. This is the net marginal revenue. And second thing, you will consider external buy-in price. Okay? You will consider this external buy-in price, which is rupees 14. Is rupees 14. So what will you do here? You will consider the minimum of these two value, okay, which is rupees 14. So rupees 14 will be the maximum transfer price, the maximum price which the manager of division B is willing to pay. Okay, the maximum price which the manager of division B is willing to pay. Now let us see what will be the minimum transfer price. In case if there is no market for the product which you are producing in division A, you consider the minimum price as the marginal cost. But yes, in case if the external market exists, we will assume that the entire capacity, we are capable of selling our entire capacity to external market. So in such case, if we want to transfer the goods to other division, we have to sacrifice our contribution from the sale of external market, which we want to recover. So we want to recover here the opportunity cost. We want to recover it. Okay. And what is the opportunity cost here? Rupees 2. You can see here selling price is rupees 10, marginal cost is selling price is rupees 12, marginal cost is rupees 10, so contribution is rupees 2. We want to recover it. Okay. So the marginal cost is rupees 10, opportunity cost is rupees 2. So you will quote the minimum transfer price as rupees 12. The maximum transfer price is rupees 14 and the minimum transfer price is rupees 12. I hope it is clear to all of you. I hope it is clear to all of you. If you have any doubt, any doubt, you can ask me. If you have any doubt, you can ask me. Now we have the next question on goal congruence. So I want you to read this question and you can take the help of this diagram for solving this question. Yeah, read this question. This is November 2019 revision test paper question. Do this question. Read it carefully. I'm giving you time, 4-5 minutes to read it. Then we will discuss. Okay? I'm giving you 5 minutes. I'm giving you 5 minutes to read this question. I'm giving you 5 minutes to read this question. Please read it carefully. Okay, Preeti. Please read this question. And if you have done reading, let me know. Okay, read it. Read this. Please read it. Read and please tell me if you have done reading of the question. If you have done the reading of the question, please tell me. Okay, reading is done. Okay, so shall we discuss this question? I hope you have done the reading. Okay, now let us discuss this question. A manufacturer has two divisions, Division A and Division B. Division B produces components that are used by both Division A as well as external customer. So you can see here, there is two division, Division B and Division A. Division B is producing such good which can be used by Division A as well as external customer. Okay, always before doing the question of transfer pricing, always try to make such kind of diagram. Okay, it will help you to solve the question. Okay, see how easy it is to solve the question after making a diagram like this. Okay, so we have two division, Division A and Division B, and Division B is producing the goods for Division A and for the external market. Okay, it is mentioned here. Division A get its entire requirement for the component from Division B. So whatever is the requirement for Division A, they get the entire requirement from Division B. Okay. Now, the annual production capacity of Division B is 1 lakh unit annually. Division B can produce maximum 1 lakh unit. This is the capacity of Division B. The maximum unit which they can produce is 1 lakh unit is the maximum unit which they can produce. The division operates at full capacity. Okay. This division is operating at full capacity, means if they have capacity to produce 1 lakh unit, they are producing entire 1 lakh unit. Okay, with no inventory at the beginning and the end of the year. Okay, there is no opening inventory, no closing inventory, means they have consumed the entire inventory which they are purchasing during the year. Okay, it sells its component to external market for rupees 4,000 per unit. Okay, the selling price, they sell their product to the external market, they're selling their product to the external market at rupees 4,000. It is mentioned. Okay, so it is mentioned they can sell the per unit, they're selling to external market per unit at rupees 4,000. Okay, variable cost of production for the component is 2,750. Okay, so the variable cost is rupees 2,750. This is also mentioned here. Okay, now internally it transfer the component to Division A, factoring any opportunity cost in the form of lost sale. Okay, total sale. So I want to underline these line, and we will discuss these line while solving the question. Okay, we will discuss these line while solving the question. Okay, these lines. Okay, total sale of Division B were 36 crores. See, the total sale of the entire company is 36 crore. Okay, so the total sale of Division B, the total sale of Division B is 36 crore, of which, see, I'm repeating this line. The total sale of Division B is 36 crore, out of which the external sale, this sale is rupees 20 crore. Okay. Okay. As per the company policy, demand from Division A has priority over the external customer. So this is the company's policy that they will first give the priority to their internal division, then they will sell their good to the external market. Okay, so they will first give their entire goods to Division A. Okay. This year, there was additional demand from the external customer for 18,000 components. Okay. Now they are saying that this year, this external customer have additional 18,000 unit demand. Okay. Now, however, since Division B operated at full capacity, this demand was not catered to. Okay. So since the company division B is producing at 100% capacity, so they're not able to meet this demand of external market. Okay. Now let us see the requirement of the question. Analyze the sale in terms of rupees and unit made by division B to both external and internal customer. Okay. So first of all, you have to analyze the sales. Okay, in terms of rupees and unit. Okay, then what you have to do after this, you have to recommend the transfer price range to promote the goal congruence between A and B. Then discuss the effect of change in external demand, means the last portion 18,000. Okay, the change in external demand, what is the effect if this external demand will come, what is its effect on transfer price. Okay, so this is the question you have. You can see here, this is the question you have. Okay, so I want all of you, you can read it once again. Okay, and give me some idea how to do this question. If you can give me the idea, how can we do this question? Okay, since I have given you some information in this diagram, what are these information? You can see here that the total sale of division B is 36 crore, while the sale of this division B is 20 crore. This is the sale, total sale. Okay, and selling price per unit is rupees 4,000. So in this way, you can calculate the unit sold in external market. Okay, in this way, you can calculate the unit sold in external market, which is 50,000. They're selling 50,000 unit to external market. Out of 1 lakh unit, they are selling 50,000 unit to external market. It means that they are transferring internally 50,000 units. Okay, so out of which they're earning 16 crore. Okay, so this is how you can find the unit which they are transferring. Now, can you solve it? See, I think there is some problem. I'm not able to view your queries and I have to check it again and again. Please try to do this again. Okay, try to find out the transfer price between these two division, okay, which encourage the goal congruence. Okay, try to do this. At least try to find out the transfer pricing. And in between, I'm taking your query. I'm watching your query. Okay. Wait, I'm watching your query. If you have. Please try to do this. Okay. Very nice. Ambika is writing the answer. Dr. Tahim Ahmed. Thank you. Thank you, sir. Okay, Anjali. Anjali is giving me answer. Other student, quickly, give me the transfer pricing range. Give me the transfer pricing range. There is some problem in my phone. I can't see your queries in my phone. Give me the range of transfer price quickly. All student. Quickly give me the answer which you can give me, the transfer pricing range so far, whatever we have discussed. Okay. Raman, Ravi Teja, Ambika. Other student, give me quickly answer. Okay, now let us discuss. So in this question, you can see that you can sell the maximum unit. You are selling the unit in external market 50,000. Okay. You're selling 50,000 unit in the market. Okay. And the variable cost is rupees 2750. Okay. And internal transfer is 50,000 units. Okay. So the transfer pricing range to promote goal congruence, the price which you will quote here, okay, for that you will see if there is any spare capacity. Okay, if there is any spare capacity, then the price will be the variable cost. So in case if there is no external demand, okay, so in that case, you can see there is spare capacity of 50,000 units. Okay? And in that case, you can charge the variable cost you can charge the minimum price as rupees 2750. Okay? You can charge it as 2750, the minimum price. And in case The second point, in case if there is any external demand, for example, if there is external demand of 18,000 units, in case if there is external demand of 18,000 unit, then what will you do? You will do this, like for 18,000, you will consider the transfer price different, and for remaining 50,000 minus 18,000. What will be this value? For 32,000 units, you will consider different transfer pricing. Now you can see here that why, if the external sale will increase from 50,000 to 18,000 more, in such case, if the organization division B will prefer to transfer the unit to division A, in that case, the organization will lose here some opportunity cost, will lose some contribution, and that contribution organization want to recover. So for that, they will consider the variable cost plus the opportunity cost. Okay? The variable cost is here 2750, and opportunity cost is a difference of 4,000 minus 2750. Okay, and for the spare capacity, you can charge the variable cost. Okay, so in this way, you can find the variable cost, you can find the answer. Oh, shit. Oh, sorry, I didn't share the screen. Okay, let me repeat it. Okay. I hope the screen is... Wait. Screen is visible now. So you can see here that what will we do? We will consider for 50,000 in case we will consider two case. In case if there is spare capacity of 50,000, okay, and there is no external demand, and there is spare capacity of 50,000, for that we will keep the minimum price as 2750. And in case if we have more 18,000 extra demand apart from this 50,000, in that case, what will we do? We will consider transfer price in two way. Okay, first for 18,000 unit, we want to recover the opportunity cost, and for remaining 32,000 unit, which we want to transfer from division B to division A, for that we want to recover only the variable cost or the marginal cost, which is 2750. So here we want to recover the variable cost only, and for this 18,000 unit, we want to recover the variable cost and opportunity cost. Okay, so this is what we want to recover. Okay, so this is how we will do the valuation. Okay. Okay, there is some problem. I want to take a break for 5 minutes, and in between I want to resolve that problem. There is some technical problem in my end, so I want to resolve that issue. So I'm taking 5 minute break. In between, you can do one thing. We have to discuss one more question. We will discuss this example, and this example, these two examples we will discuss today. Okay, and if there is any remaining portion of this, we will discuss that also. There is some technical problem, let me resolve that. So I'm taking a break of 5 minutes, and I'll be back in 5 minutes. Okay, in between you can read the next two question also. Okay, we have two more questions to do in today's session. So you can, in between, you can read this question, and you can read this question. Okay, we have these two questions, so I expect all of you to read this question. See, let me share this question. Wait, this example. So please read this example. In between, I'm taking a break of 5 minutes to resolve the problem I have. Okay. Okay, friends, I'm back. So there was some technical problem. Now let us do this question. We have two more questions to do in today's session. So this is the question where we have an example from our book. This is an example from our book. ठीक है? We have a company. I hope you have done reading of this question, and I hope you have tried this question at your own also. So wherever you have, first quickly tell me that you have done the reading of this question or not. ठीक है? Then we will discuss. Quickly tell me you have done the reading of this question or not. See here, we have a company. Company has a division A producing three product X, Y, Z. ठीक है? We have a company in which we have a division A, and this division is producing product X, product Y, and product Z. ठीक है? Each product can be sold in the open market in the following manner. So they are saying that they can sell these product in open market. Okay, they can sell the external market. They can sell 800 unit of product X. They can sell 500 unit of product Y, and they can sell 300 unit of product Z. So in external market, they can sell all these units. Okay. Then they have selling price per unit for product X, product Y, and product Z. Okay, they have selling price per unit. Then they have variable cost for these product X, product Y, product Z. Okay, and what else they have? They have labor hour required per unit. Okay, they have given this. I don't know what is the use of this. Let us see what is the use of this point. Okay, we will see this later on. Now see, product Y can be transferred to product B. Product Y, out of these three product, this product Y, you can transfer this product Y to division B. Okay, but the maximum quantity that might be required to transfer is 300 unit. But you can say, so you can transfer the maximum product Y in division B is 300 unit. You can transfer maximum 300 units in division B. Okay. Division B could buy similar product in the open market at rupees 45. Now this division B can buy this product Y from the market at rupees 45. Okay. Now, what should be the transfer price per unit for 300 units of Y if the total labor hour available to us is 13,000? Now, do it one by one. If you have the total labor hour of 13,000, what will you do? In case if you have total labor hour of 8,000, then what will you do? And if in case you have 12,000 labor hour, then what will you do? We have these three cases with us. Okay, we have these three cases with us. Okay, so means we have three questions in this question. We have this example. You can divide it into three parts. Okay. Now, in this question, you have to indicate in each of these three different parts, you have to find the transfer price range that promote goal congruence. You have to find the transfer price range which promote goal congruence. Okay, ji. So your first question is that, okay, after reading this, first, if you have 13,000 hours, okay, if this division A has 13,000 hours, okay, so this is their capacity of machine. Maximum they have 13,000 hours, or the labor can do maximum work in 13,000 hours. Okay, then what will be the transfer price? In this case, what will be the transfer price? Can you tell me? I want all of you to give me some suggestion. Can you give me? Are you there? Can you give me? Quickly tell me, are you there? It's a very good question. A very good question. All students? All students? Quickly tell me, you there? I'm waiting for you all. Can you tell me the transfer price if division A has 13,000 hours? Ambika, other students, give me the answer. Okay. Okay. So see in this question, if division A has 13,000 hours, okay, if they have 13,000 hours, okay, in that case, what transfer price you will quote for the product Y if you want to transfer 300 units? Okay. Now for that, you have to first check whether this division A have spare hours or not. Okay. Spare capacity or spare hour, you have to check that. है ना? Why? Because in case if they have the spare hours, spare capacity, you can quote the price as marginal cost. Okay. From here, you can take the marginal cost. In case if there is no spare hour, no spare capacity, then you will consider the opportunity cost also. Okay. For that, you need to consider that. है ना? So you have to find that, you have to consider that. Okay. So first you check that whether they have spare hours or not. Tell me they have. No, see, first we will see that whether they have the enough time or not. We will do the ranking and all when we have limited resources, है ना? We do the ranking and then accordingly we do the production. When for that, first we have to check whether our resources are limited or not. In case if you don't have, if you have enough resources, then you don't need to find this contribution or ranking. You don't need to find out which product you have to produce and which you need not to produce. Okay. So first you check whether you have the spare capacity or not. Okay. First you check that. How will we check, ma'am? Let me tell you how will you check that. See, what will you do? First, you will see for producing X, you need 6 hours. 1 unit, you need 6 hours. And how many units you are producing? 800 units you are producing. So see, for X, how many hours are required? For producing X, how many hours are required? You're producing 800 units. And for each unit, you need 6 hours. So how many total hours are required for producing X? Then for producing Y, you are producing 500 unit, and for 1 unit you need 8 hours. Okay, 8 hours. Okay. For Z, you need to produce 300 units. Okay, you need to produce 300 unit, and for 1 unit you need 4 hours. Okay. So now here, first check the total hours you have. ठीक है, and check whether you have spare capacity or not. ठीक है, first check whether you have spare capacity or not. So here you need 10,000 hours. For producing these goods, you need 10,000 hours. है ना? So yes, you have spare capacity. You have 3,000 hours extra. You can see. And for those 3,000 hours, in those 3,000 hours, you can produce product Y for division B also. है ना? Let us see how many hours are required for producing product Y for division B. You need to produce 300 units of product Y for division B. You need to produce 300 units. ठीक है? So you can see for product Y, how many hours are required? 8 hours are required. So you need 2,400 hours more. You already have, in total you have 13,000 hours. Okay. For the external markets, for producing product X, for producing product Y, for producing product Z, you need 10,000 hours. So you can see here you have spare capacity of 3,000 hours. So in that spare capacity, you can produce the product Y for division B. How many units of product Y is required to manufacture? 300 units. For each unit, you need 8 hours. For each unit of Y, you need 8 hours. So how many hours are required here? 2400 hours are required here. So here you can see that you can do the entire production in how many hours? 1 to 400 hours. And how many hours are available? 13,000 hours. So you have enough resources. So that is why you don't need to do ranking. When we do this ranking, when we have limited resources, then we do the ranking, then we try to find out which product we should produce. But right now, if you have 13,000 hours, like you have in first case, you have 13,000 hours. If you have enough resources, you don't need to do ranking. You do the ranking if you have limited resources. So here, in this case, you don't need to do ranking. Now tell me what will be the transfer price in this case if you have spare capacity for producing the product Y for division B. Okay, quickly give me the minimum transfer price. Minimum transfer price for product Y, 3,000 units for division B. The minimum transfer price which you will quote here. What minimum price you will quote here? Okay. You're saying that, ma'am, we will quote 24 rupees. You can see here the variable cost for producing product Y is 24. Okay, and since we have spare capacity, so what will be the minimum price? What will be the minimum transfer price? The minimum transfer price will marginal cost, and marginal cost for product Y is rupees 24. So you can write rupees 24 as the transfer price. Rupees 24 will be the transfer price. Okay, the minimum transfer price. And since in the question, if you want to calculate the maximum price, see how we calculate the maximum price. For finding the maximum price, we need two things. First, what you do, you want to find the net marginal revenue, which is not possible to calculate here. Why? Because the selling price of the final good is not given. Okay, finished good, final good selling price is not given. So it is not possible to calculate the net marginal revenue. Then what will you consider? You will consider the net external buying. Next external buying 45 rupees. So you will take this value as maximum price. Okay, so the maximum price, maximum transfer price which this division B is willing to pay is rupees 45. I hope it is clear to all of you. Is it clear? The maximum transfer price is clear or not? I hope the maximum transfer price is clear. Now, see, don't do this portion. Okay, before doing this portion, okay, do this question, this portion. After doing this question, I hope you have done. If you have any doubt here, you can ask me. In first portion, A, if you have any doubt, you can ask me. In example, in this example, if you have any doubt, in case A, if you have any doubt, you can ask me quickly. Is there any doubt? Okay, no doubt. Now let us see the next portion of the question. In the next question, see, the next portion of the question is what? In the next portion, they are saying that the organization have only 8,000 hours. You can see here, for producing the goods for the external hour, you need minimum 10,000 hours. You can see here, if you want to produce the goods for the external market, you need minimum 10,000 hours. है ना? But you have 8,000 hours, means now your resources are limited. Now the resources are limited. है ना? Now you have to decide which product out of X, Y, Z, which have to produce and which, how much you have to produce. Okay, which quantity you want to produce and how much unit you want to produce in order to get maximum contribution. For that, what you do, you will calculate the contribution of X, Y, Z, then contribution per hour, then you will give the ranking, then accordingly you will find the unit which you want to produce. Okay, then after that you will try to find the transfer price. Okay, so let us do this portion. Can you do this at your own? Will you try to do this at your own? Can you do this? First consider the selling price, then variable cost, find the contribution per unit, give the ranking. Do this portion. Okay, do this portion of the question. Raman. Okay, there is a doubt from Raman. Raman is asking me, Raman Sachdeva from Delhi. He's asking me, ma'am, why we are not considering the labor hour in variable cost? See, in cost, we will consider the cost now. Why will we consider hour? Labor hour. Why will we consider labor hour? Second thing, in variable cost, you have already considered what we consider in variable cost. We consider the direct material cost, we consider the labor cost, we consider the other variable cost. Okay? In variable cost, labor cost is already included. है ना? So if this is the variable cost per unit, it means that the direct material cost, direct labor cost, other variable cost, everything is already included here. And what else is mentioned here? It is given here, for producing 1 unit, how many labor hour is required? For 1 unit, how many labor hour is required is mentioned here. Why will you consider in cost hours? Why will you consider the hour in the cost? You will not consider that. In variable cost, the labor hour is already included. Okay. Now, tell me, it is clear or not? Okay, you are try to do this at your own. Okay, so what will we do? We will try to find here the contribution. Why are we trying to find the contribution per hour? Why will we do the ranking and all? Because in this case, you can see here in case B, the resources are limited. You can see here, you want to produce maximum 10,000. You want to produce maximum these unit in external market, required in external market. For that, you need maximum 10,000 hours. Okay. And you can see here that your resources are limited. 8,000 hours. Resources are limited. Okay. So for that, you need to do the calculation and you have to do the ranking. Okay. Now let me do this for you. So we are trying to find out the contribution per unit product wise. We have 3 product X, product Y, product Z. Okay, we have these three products. The selling price per unit is given here. What is the selling price per unit? 96, 92, 80. 96, 92 and 80 is the selling price. What is the variable cost per unit? Contribution per unit. What is the variable cost per unit? You can see here 33, 24, 28. 33, 24 and 28 is the variable cost. So from here you can calculate the contribution. 63, 68 and 52 is the contribution per unit. ठीक है. Now you want to calculate the contribution per hour. Contribution per hour. What will you do? You will divide the contribution with the hours which is required to produce 1 unit. So hours are here 684. 684. So the contribution per hour here is 6. Contribution per hour here is sorry, this is not 6. This is 10.50. Contribution per hour here is 8.50 and contribution here is 13.00. These are the contribution per hour you have. So here you can see that you have the highest contribution per hour here. So for this we will give first rank, and for this you will give the second rank, and for this you will give the third rank. Okay. Now we have limited hours. How many hours? We have 8,000 hours. है ना? So in 8,000 hours, how many unit we want to produce? How many unit we will produce for Z, then X, then Y? ठीक है? First we will produce entire unit of Z. है ना? First we will produce the entire unit of Z. External sale. ठीक है? Quantity, hours per unit. ठीक है? Total hour. ठीक है? So Z, for Z, how many units you want to produce for Z? 300. 300 unit you want to produce. How many hours is required for producing 1 unit? 4 hours is required. For 1 unit, you need 4 hours. So for producing Z, you need 1200 hours. Okay. Then after producing Z, you will produce product X. Okay, you will produce product X. How many units of X is required? 800. 800 units of X is required. How many hours? R is 6. So you need 4,800 hours. है ना? Now you can see that you have limited 10,000 hours. So how many hours left here? 2,000 hours left here. ठीक है? For that you will produce, in that you will produce product Y. For producing 1 unit of product Y, you need 8 hours. So how many hours are required? How many quantity you can produce here is 250. How? You will divide these two values and you will get here 250 units you will produce for product Y. Okay. While the demand in external market is 300. Sorry. Product Y, the demand in external market is 500. And apart from that, there is demand in the division B also. Okay. So in this case, what will we do? So you can see here that we can produce maximum 250 units here. Okay, we can produce maximum 250 units here. Okay, now what will be the transfer price? How will we decide the transfer price here? If our resources are limited, you can see here that though there is external market for product Y for 500 units and there is demand in division B for 300 units. Okay, now if you are producing 250 units because you have limited resources. I have taken here as this will be 8,000. So you can see here, since your resources are limited, you can produce maximum 250 units, which is required for division B. Okay. Now for this 250 unit, what price will you quote? Okay. What transfer price will you quote for these 250 units? Okay. Give me the answer. If you can produce 250 units, what price will you quote for these 250 units? Okay, you can produce, you can see here, you have only 8,000 hours now. Okay, previously you had 13,000 hours. Now here you have only 8,000 hours. Okay, so in that 8,000 hours, you can see that you can produce all X product, you can produce all Z product because you are getting high contribution from these two products. Now for producing product Y, you can produce maximum 250 units. That two product you will not sell in the external market. There is requirement in division B. So you will sell them to division B. Now you have to decide at what transfer price you will transfer these 250 units to division B. What transfer price? Can you tell me the transfer price for it, for this? Can you tell me the transfer price for this? Can you tell me? Have you tried it at your own? Can you tell me? Yeah, very nice. I receive answer from Anjali, Ambika, Vasanti. Okay, yeah. Okay. So you can see here, for producing 250 units, how many hours are required? See, what will be the transfer price? You will decide here when the resources is limited and you have only 8,000 hours. See in the question, what is given here? What should be the transfer price per unit for 3,000 units of Y? Okay, so you have to find out the transfer price for 300 units. For 300 units. Okay, so first of all, let us see how many hours is required for producing these 300 units. Okay, you can see here that for one unit you need 8 hours. So how many hours are required here? 2,400 hours are required here. Okay, 2,400 hours are required here. You can see that you can maximum make 250 units. Okay, and that 2 unit you can sell to external market. Okay, So you can sell that 2 unit in external market. So if you are not selling those unit in external market and you are transferring that unit to division B, then in that you are losing your contribution, your opportunity cost, which you want to recover from here. है ना? You want to recover the opportunity cost which you are losing from here. ठीक है? How many hours you can save from here? 250 into 8. I think this is 2000. ठीक है? 400. And for remaining 400 hours, you have to disrupt the production of other product. ठीक है? So the least profitable product is what? You will disrupt the production for the remaining 400 hour. You will disrupt the production of this product also. So you will lose the contribution on 250 unit. Let me explain it in a better way. Wait. See, it is compulsory to supply 300 units to division B. ठीक है? It is compulsory to supply 300 unit to division B. And since you have limited resources, you can maximum produce 250 units. In order to have maximum contribution, you can maximum produce 250 units here. ठीक है? And on that 250 unit, you are using 2000 hours. ठीक है? But you need to produce 300 units, and for 300 unit, how many hours are required? For 300 units, you need 8 hours per unit. You need total 2400 hours. ठीक है? And since you are not selling these 250 units to external market, you will lose the contribution on it, which you want to recover here. So on this 2000 hours, the contribution which you are losing here, for division, for product Y, how many contribution you are earning per product? Per hour you are earning 8.5 contribution. ठीक है? So for 2000 hours, you will earn how much contribution? You will multiply this with 8.5, and you are losing this 8.5 per hour. You are losing this total contribution here, which you want to recover. Apart from that, you need total, this means you need 400 more hours. For those 400 more hours, you will disrupt the production of other product. Like you have already disrupted this production and you are transferring this unit to division B. Similarly, you will disrupt the production of product X. How much? For 400 hours. ठीक है? For 400 hours, you need more 400 hours to produce additional 50 units. ठीक है? So for that 400 hours, you will disrupt the production of X, and therefore you will lose the contribution which you are earning here. Production contribution per hour you are earning here is 10.5. For the remaining 400 hours, how many contribution you are losing? How many contribution you are losing? This is 10.5. So this is the contribution you are losing. This is the total contribution which you are losing, which you want to recover from 300 units each. This is the total contribution which you are losing and which you want to earn from each unit. What are these values? I think this is 17,000 and this is 4,200 and the total value is 21,200. Okay, so the contribution per unit which you are losing here is 70.66. Okay, this is the contribution per unit which you are losing and which you want to recover. Okay. So what will be the transfer price? Transfer price will be the minimum price, okay, which is marginal cost plus opportunity cost. Okay. What is the marginal cost for these product Y? Marginal cost is rupees 24. Okay. Marginal cost is rupees 24. And what will be the opportunity cost? You can see here we have calculated the opportunity cost as 70.66. So 70.66 94.66. This will be the minimum transfer price. 94.66 will be the minimum transfer price. This will be the minimum transfer price. Okay. I hope it is clear. If you have any doubt, you can ask me. I can repeat if you want me to repeat it. It is quite lengthy. I know that. Yes, alternatively, see, Ambika is asking me, ma'am, why didn't you have take the variable cost per unit? For 250 units, see, we will take the variable cost. For finding the transfer price, we will take the variable cost. Marginal cost we have already taken. But we need to calculate the opportunity cost, means the contribution which we are losing. Okay, since we have limited 8,000 R, in that limited 8,000 R, we can produce the goods product X, product Y, product Z, and we can sell them in the market to earn the contribution. But since the time is limited for producing these products, we need 10,000 hours. है ना? We need total 10,000 hours, but we have limited time. So what will we do? We will do the ranking and we will see, oh, this is the most profitable product. I will produce this entirely. Then this is the second highest contribution product. Then I will produce this. Since I'm getting the least contribution from this product, I will produce it at the last. Okay? So in this way, I will do the production. So after checking this, I got that only 250 unit I can produce from here. Okay? Now what? We need to transfer 300 unit. For 300 unit, we need 2400 hours. Okay? Means we need 2000 hours from here, means 250 unit. And for producing more 50 units, we need more hours. For that, we will disrupt the production of product X. We will stop producing products X for producing product Y. Why? Because there is internal demand in division B. So we will lose the contribution on these 250 units. We will lose the contribution on these 250 unit here. And for producing this 50 unit, how many hours are required? 400 hours are more required, because for 1 unit, you need 8 hours. है ना? For 1 unit, you need 8 hours. So you are requiring 400 more hours. And for that hours, you will take from here. Then you will see how many unit you are losing here, contribution you are losing here. Okay? You need 400 more hours. So you will see that in 1 hour you are earning this contribution. In 1 hour you are earning this contribution. And if you will use 400 hour of product X, in 400 hour, how many contribution you can earn which you are losing? In 400 hour, you can earn this contribution which you are losing. So you will consider both, that you are losing this contribution and you are losing this contribution. Overall total contribution which you are losing. Why you are losing this contribution? Because you are producing 300 unit product Y for division B. Okay? And hours are limited. You have just 8,000 hours. Okay? And that is why you have to disrupt this production. Okay? And you have to take 400 hours from here also. Okay? In that 400 hour, whatever the contribution you are losing, you want to recover that also. Okay? From the transfer price. So accordingly, the transfer price will be this. Okay? It is clear or not? You want me to repeat? I can repeat it again if it is not clear to you. Okay, you have not understood the opportunity cost. Let me revise that again. See, what is the opportunity cost? The contribution which you are losing. The contribution which you are losing. Okay? The contribution which you are losing. See, you can see here that how many unit you can produce with 8,000 hours. Let me revise this everything. Okay? If you didn't understand, let me revise it. You have only 8,000 hours. Okay? Limited time. You can see here that in 8,000 hours, you can produce all these units, but you can produce only 250 units here. And in 250 unit, how many hours are required? In 1 unit, you need how many hours? 8 hours. So in 250 unit, 8 into 250, you need 2,000 hours. ठीक है, you need 2000 hours. While if you want to produce 300 unit, how many hours are required for producing 300 units? For product Y, you need 8 hours for 1 unit. For 8 hours for 1 unit you need here. So here you need total 2400 hours. ठीक है, for this internal transfer. Now see, you have limited time. In that limited time you can produce this entire product, but 250 product here, and which you can't sell here, you have to transfer it here. 250 product you can manage from here, but for remaining 50 units you need how many hours? 8. You need 400 more hour. And from here, where you will get this 400 hour? You have to disrupt the production of this or this. From where you are getting less contribution, you will disrupt the production. Okay, you can see here that from product X you are getting less contribution, so you will disrupt 400 hour production at this place, because you have to first fulfill the requirement of division B. Before selling the product in external market, you have to first fulfill the requirement of division B. But yes, whatever contribution you can earn from outside, you will recover that contribution. You will recover the contribution loss you are incurring here. You want to recover that from here. Okay, so you can see here, since you can't sell 250 units, you want to recover the contribution for those 250 units. And for additional 400 hours you are requiring, you will disrupt the production of product X. So you will consider the contribution you are disrupting 400 hours of product X. So you will calculate the contribution from here for the product X, and 2000 hours, since you are producing 250 units here, so 2000 hours you will take from here. Ticket 2400, I need total 2400 hours. So from here, from these two value, I will get the total contribution. I will get the total contribution, which is these two value. I hope it is clear. Okay, I hope it is clear. Thank you so much. Okay. So I hope you understood how this opportunity cost come. Okay, always remember, if you are losing the contribution, see, you can see here that you have to produce these 3000 units. For that you need 2400 hours, but you can see here that you have limited resource, limited time hours. Even if you want to produce these units, you need 10,000 hours. So it means that you cannot produce these units entirely, since you have limited 8000 hours. So what will you do? You will produce those goods which give you maximum contribution. So first you will produce this, then you will produce this, then you will produce this according to the ranking you have. Okay, first this, second is this, second is this, and third is this. Okay, so accordingly you will produce them. You can see here that you can produce maximum 250 units here. On 250 units you will lose 2000 hours. Okay, so from here you can see that how many contribution you can earn from these 2000 hours. And again, for additional 400 hour you need to disrupt the production of X. From here you will see how many contribution you can earn from here. Okay, you can see in for producing 300 unit which you are transferring to division B, for that how many hours are required? 2400 total hours are required. Okay, so you will see the contribution which you are losing, okay, which you will add, okay, here, and you will find the transfer price accordingly. Okay, I hope it is clear. Okay, now let us see the third portion also. Have the third portion also, so let us see the third portion also. Okay, now in case of third portion, what is the condition you have in third portion? In third portion, how many hours are there in the question? 1200 hours you have. For in the third case you have 1200 hours. You can see For producing the external market product, you need 10,000 hours. It means that you have 2,000 hours extra. है ना? You have 2,000 hours extra. You have 2,000 hours extra. You have 2,000 hours here extra. ठीक है जी? ठीक है? But in that 2,000 hours, you can maximum produce 250 units. It means that you need to produce additional 50 units. For that, what will you do? You will take those 50 units from here. है ना? Product Y. You're selling in external market 500 unit. You will take the additional 50 units from here. ठीक है? And for that, you will see the contribution which you are earning here. ठीक है? How many contribution you are earning here? You can see how many contribution you are earning here for product. See, you can take the time or per unit wise calculation. Anyway, you can do the calculation. Both the way is correct. Okay. So if you are considering the hours, that will be good. If you consider the per unit, that will also be good. Product Y, you can see here that we have 2,000 spare capacity. In that 2,000 spare capacity, we can produce 250 units. We can produce 250 units. Okay. But we need additional 400 hours. We don't have the spare hours, in which we need to produce 50 units so that we can produce 300 unit, which is required in division B. Okay. We can produce 300 unit, which is required in division B. What happened? यार हैंग हो गया. यार तो हैंग हो गया, हैंग हो गया, हैंग हो गया, हैंग हो गया. नहीं, मेरा लैपटॉप ही हैंग हो गया है. मैं कुछ नहीं कर पा रही हूँ इसमें. ट्रांसफर मीन्स हाँ 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 हाँ, हाँ. मुझे ये जस्ट ये लास्ट पोर्शन एक्सप्लेन करना है. मैं रीस्टार्ट करूं? Yeah. So now let us consider the last portion, third portion of the question. In the third portion, you can see, you can see that we need 400 hours extra. Okay, you can see here that we have, you can see in the question that we have what we need to for producing these 300 unit. We need how many hours? We need 2400 hours. Okay, but we have extra spare capacity of 2000 hours, and for that 2000 hours we can produce 250 units, and for those 250 units we can quote the minimum price as the marginal cost. What is the marginal cost? 24 rupees per unit. So we can quote the 24 per unit marginal cost because we have spare capacity. This 2400 we have spare with us. However, for producing additional 50 units, we need 400 hours more. And for that, what will we do? We will check. We have these 500 units. So out of this 500 unit, we can take 50 units from here. But yes, we will consider the opportunity cost because we have external market. In the market we can sell this product. Okay, so we will consider the opportunity cost, and considering the opportunity cost, we can see here what will be the opportunity cost for product Y. We can sell it for rupees 92, and we have the variable cost as rupees 24. So while subtracting it, we can get the contribution. So for the 50 units, for the remaining 50 units, you can quote the transfer price for the remaining unit. You can consider the opportunity cost as the difference of this into 50. Okay, so in this way you can find the transfer price. You can see that how your capacity, your own capacity of the division will help you to find the transfer pricing, the capacity of the division you have, and the external market, the demand in the external market, and the price at which you can sell your product in the external market. After considering all these things, you can find the price, the transfer price for the product which you want to transfer from one division to another division. Okay, if you have any doubt, you can ask me. In case if you have any doubt, you can ask me. In case if you have any doubt, you can ask me. If you have any doubt, you can ask me. Otherwise, we will do the remaining portion in next session. Few question has left. We will do that in next session. Okay, so there is no doubt. In case if you have any doubt, you can ask me. Okay, other way, what you can do? Other way, what else you can do? You can quote the transfer price for these 250 units and 50 units separately. And if you want to combine the transfer price for the product, what else you can do? You can find here this value, divide it with 300. Okay, you will get the opportunity cost per unit. With 2424, you will add this value and you will find the minimum transfer price. So in this way you can solve it. Okay, in case if you have any doubt, you can ask me. Okay, yeah. Okay, so Ambika has given me opportunity cost. Thank you, Ambika. She has calculated the value as 3400. Very good. 3. See, we have two options here. ठीक है, what two option we can calculate? We can consider the transfer price for 250 unit as 24 and remaining 50 unit as the marginal cost plus opportunity cost, which you are quoting here as, if we divide it 3400 divided by 50, what value you will get here? 68. ठीक है, this is the transfer price which you can quote. Otherwise, the next option, if you want to keep transfer price as one transfer price, ठीक है, marginal cost, that is 24 plus this opportunity cost which you will recover from entire 300 unit. So in this way, this can be the transfer price for the entire 300 unit which you are transferring, okay, per unit for the entire 300 unit which you are transferring. These are the two way with the two way of deciding the transfer price, okay. For these 250 units, since we had spare capacity, you can quote the marginal price, and for remaining you can quote the opportunity cost. Or else, what else you can do, that we have for the entire 300 unit, this is the marginal cost, plus we are losing, since we are transferring 300 unit to production to division B, we are losing this opportunity cost which we want to recover from 300 unit. Okay, so in this way you can calculate the transfer price per unit. Okay, so these are the way, and maximum price will be what? 45 rupees. Okay, we don't have the image here. Yeah, the maximum price which we will quote is rupees 45. So in this way you can do the question. Okay, I hope it is clear to all of you. We will do the next question in next session. This question, okay, this is related to November 2020 examination. Okay, we will do this question in next session. Okay. Okay, good night, take care, bye bye. If you have any doubt, let me check it again. If you have any doubt, you can ask me. Okay, yeah, I got the answer. Let me write the answer. So you have given me the answer. Very nice. Let me write the answer. This answer is 35.33. Yeah, 35.33. We can see this in the answer. 35.33. Okay. So you can quote it here. Okay, I hope it is clear to all of you. So let me end the session and we will do the remaining portion in next session. Thank you so much. Good night. Take care.